Hi, and welcome to the Stock Scores Market Minutes for June 27th, 2016. When do you buy panic? Panic selling is often irrational selling. It is characterized by a parabolic, that is a curve, trend to the downside far below the linear or straight downward trend line. Now, eventually, price will bounce. It will tend to rebound when it approaches longer-term support. So, if you see a parabolic downward trend on the 15-minute chart, you will tend to see a bounce come when price approaches support on the daily chart. Or if you see a parabolic trend on the daily chart, you will tend to get a bounce when it approaches support on the weekly chart. So you always look to the longer term time frame to find support. You want to buy when you get a move up through the open of a particular day, or for the particular candle that you're looking at, up from a rising bottom. So if we have a parabolic trend to the downside, and then it bounces a little bit, builds a little bit of a rising bottom, and then bounces, that's your break of a rising bottom. Or if you've got candle after candle going down, and then you get one that manages to close above its open, so let's say the open was there and you close there, that often will bring that little bounce back. Now, this is a shorter term trading strategy, but it is one to take advantage of emotion. It's very important when you do this to practice good risk management. You're trying to catch a falling knife. And so if you buy this break here or this break here, you also want to say, well, if it goes down through support, I need to take my small loss for fear that it will move even lower. So you want to be very disciplined with good risk management when you are trying to buy the bounce from an oversold condition. All right, so let's talk about the market here. Here is the chart of the S&P 500. You can see the huge gap down on the news out of Europe, and it actually opened down here. It bounced back for the first hour or 2 hours of the day, and then it rolled over and is now back to support. Now that is that longer term support. So it's very oversold. Here's our downward trend line on this time frame, and we're way far below it, and we are at some area of support. So I call this chart a neutral chart, even though it's pretty ugly in the short term. Because it is at support, we should see a short-term bounce back. Now looking at the longer term time frame, we are breaking this upward trend line after hitting this resistance level 3 times, and then more resistance just above that. So this is a longer term negative signal because it is breaking the upward trend line. So it's a conflicting chart situation here, because the short term chart says probably see a bounce in the short term. Longer term chart is saying probably longer term, looking out weeks or months, this market likely to move lower. And whereas lower, probably down to support in this area here. All right, so that's how we want to sort of trade this S&P 500 or the stock market in general. Is short term, look for a bounce, but longer term, don't be surprised if we see more weakness. Now on the Russell 2000, it's actually outperforming the S&P 500 because it is not as big of a break of that upward trend line. It recently broke its downward trend line. I think that we may see money rolled into some of the lower price stocks once we get some stability in the overall stock market. And that may take a little while before we get that stability, but I think that this market will ultimately do better than the larger cap stocks. Now on the Canadian side, similar situation. We had the big gap down. It actually opened down here, hit a high up there, and trailed off at the end of the day. But again, support, it's been touched a few times, and so we should hold that. I wouldn't be surprised if Monday we open up down around in here somewhere and then try to bounce back. However, look at this. We got these falling tops, a downward trend line. So any bounce back is going to encounter resistance not too far away. That means that a bounce is something that you can trade, but you don't want to be a longer term time horizon unless that downward trend line gets broken. And again, looking at the longer term chart, there's our upward trend line, and you can see we are starting to move through that. We had the what I call a bursting bubble candle here, where we hit a new high, closed below the open. Now we're breaking the upward trend line. That points in the weeks ahead to more weakness, probably coming down into their first stop at 1950 on the TSX. Now the TSX Venture, still in a good upward trend. Of course, there's a heavy concentration of gold mining stocks. The gold miners did well on Friday on the negative news from Europe. And so this market remains in that upward trend. but certainly we're getting a little bit of some falling tops here. So if we break this upward trend line, then you want to be concerned. For now, my expectation is it probably bounces off of this and continues higher. I think this is a risky market to initiate positions now, but if you are long this market, there's really no reason to sell until that upward trend line gets broken. Treasuries, which is of course the really an indication of where interest rates are going. We had a big gap up on Friday in the bond market in the US, and that means interest rates drop, and so that makes it cheaper to borrow money to mortgage a home, that sort of thing. That's actually good for the economy. I don't think it's going to get above this resistance level in the short term. I think maybe we open up a little strong on Monday and then start to tail off again, simply because we're a bit overbought on the bond market. And so aside from what could happen in the next couple of days, I do think that we'll see some pullback in the Treasury bond market. On the US dollar side, we have broken the downward trend line. Now, this downward trend line has been underway for a number of months, and it started to build some rising bottoms. So I do think that this is the start of a trend reversal. It wouldn't surprise me if we pulled back before we went higher, but I think looking out weeks ahead, the US dollar is probably higher. Short term, a little overbought. It made that break through the downward trend line. So yeah, it could open up strong again on Monday. And as I've said a number of times, pull back and then start to go up. So I think if you want to be a buyer of assets that do well when the US dollar is rising, you want to wait for a pullback. You don't want to chase it here. Wait for a pullback and then a break of the pullback. Finally, on gold, not finally, we have a couple more charts. Here is the upward envelope of this pattern. This is an expanding triangle pattern, and you can see the volatility increasing with each swing, but we're right at the top of that, and I think that you're probably going to see a pullback in gold in the near term. Doesn't mean that the trend, the upward trend that is in place for gold stocks is over. I just think it's risky to chase those stocks here because they had a pretty good run in the last, on Friday they had a big pop higher. And I just think you're probably not getting a great risk-reward trade-off to initiate gold positions here. If you own them, there's no reason to sell until the trend line is broken, but don't initiate new positions up here. On the oil chart, here's our upward trend line. We've seen it touched a number of times, and we're threatening again. But the difference here is that we've formed a falling top. So I want everyone to be real careful with the oil market in the next week, because if we break this upward trend line from this falling top, which could very well happen with the expected slowdown in Europe because of the Brexit situation, that could cause a break of the upward trend line in oil, and then I think you want to take some profits on your oil stocks if that happens. However, if the upward trend holds and we continue higher, well, then continue to hold. That's just something real important to watch for next week. Finally, here's the fear chart, and you can see that fear broke from a rising bottom, and that could lead to another summer of discontent in the stock market. Again, hitting some short-term resistance. Wouldn't surprise me in the next 5 days to see this pull back, but looking out beyond 5 days, wouldn't surprise me if this starts to move higher with more pronounced selling in the overall stock market. So my rating long-term on US stocks and Canadian stocks is bearish because we've had this breakdown of the long-term trend. However, short-term, I've only got my rating at neutral, not bearish, because I do think that there is a good chance we will see a short-term bounce in the equity markets. Long-term on gold, I remain bullish, but I don't want you to be initiating positions. I put a neutral rating on the short-term because it is overbought, and that means likely we see a pullback in the gold sector in the next 5 days, let's say. On the oil market, neutral long-term, threatening that long-term upward trend line. Bearish short-term because it has been moving down the last few days. Brexit brought panic selling on Friday, but short-term charts are near support where we should see a near-term bounce. Could be Monday mid-morning, could be Tuesday, Wednesday, hard to say, but watch for that. However, longer-term damage has been done to the market. So longer-term, expect more weakness, be cautious. Unless we can break through resistance, I want everyone to be cautious with stocks going into the summer. Gold is overbought short-term. Oil is threatening its upward trend line, and so therefore be cautious. Well, that's been the Stock Scores Market Minutes for June 27th, 2016. Have a great week in the market and trade well.